Hello, everyone. Welcome to howtotrade.com. I'm Shane Vernier, and this is the U.S. mid-session brief. Today, we're going to do a little bit of a strategy session. We're going to talk about the 920 crossover. We're working one of those right now on the NASDAQ. Interesting trades, sort of a little bit choppy here with U.S. equities to open the week. As far as the Piranha, we're gonna make some Piranha trades. I'm going to sort of adapt the Piranha, maybe a couple futures contracts. We're going to do a little bit of high-impact scalping, and I think that we're going to be in absolute business here. There's a few trade ideas that I want to get out of the way right off the bat, and then we're going to talk a little bit about the economic calendar and the reason why we need to be passive sort of on a Monday. I don't know that you go into a Monday, you don't rush headlong into risk. You need to wait, be confident, and then when you get in there, you make the plays Tuesday, Wednesday, Thursday. So good to see everybody back in the room. Mark Corp, good to see you. Did I have a good weekend? I had a fantastic weekend. Thanks for asking, Mark. Bobby Bob, good to see you. All right. Hello. All right, here we go. Manish, good to see you, Manish, over there in YouTube land. All right. Good evening. Love from India. Right on. Well, I appreciate you watching us. One of the great things about, the technology we have now is you can really join us from anywhere in the world. Anywhere in the world. You could be here in the States. For me, I shoveled snow today. That's how I started my morning. I shoveled snow for the first 30 or 40 minutes of my waking day today, and then I got in here and got in front of the screens and saw basically what I expected, a lot of flatline stuff today. And Mondays are very, very tricky. If you're going to trade on a Monday, there's a time to be aggressive and there is a time to be passive. I don't like the word passive, but on a Monday, it's probably the right thing to do. Let's wait. Let's let these markets set up, and then let's get in with a little bit of confidence tomorrow, the next day, and the next day. The next 72 hours are always the biggest. We can make more money in just a few hours than you can sitting around 24 hours. I'll tell you that. A lot of folks trade all day and all night. A lot of folks do. I'm not a big believer in that. I believe in targeting exactly when you need to trade and then turning up the volume. Find a trade that you believe in, that you like. And, I can't tell you to pile on the leverage, but pile on the leverage. I mean, if you want to make it in this business, eventually we have to take risk. I always say, listen, if you're going to take a risk, take it on your terms. Make sure that they're playing your game. Don't play the market's game, play your game. And I think that you'll be just fine. And that goes out to everybody out there. I think that trading, a lot of people believe that it's 95% are going to walk away as losers, and that's fine. Hey, listen, that's fine. But if you stay out of your own way, you have an opportunity to succeed in this business. And I've been fortunate. I've managed to miss a few of the biggest trades that I thought were going to be great. I sort of maybe just stuck to my discipline, maybe stuck to my leverage, didn't get overextended. And I got to tell you guys, if you're going to be in this business for a long period of time, don't get overextended. So to answer your question, Mark, I had a fantastic weekend, so I hope you guys did as well. But it's time to get it on. As far as the US 30 goes, we put this trade ID out last week. Now, listen, I had a level down here. I believe Connor had a level up here. I think we're both right. I really do. If, in fact, we do see a big washout or a sell-off and get down to our level, which is right around 42,750, you could buy that and make a lot of money doing it. But right now, it's important to think as a trader, what is happening? What's happening in the markets? What is the dynamic here? Well, what we saw is a washout underneath last week's low. This is a good look at your market dynamics over the last 3 weeks. Bam. What do you got? You washed out all those retail longs. The retail longs are now gone. So now what happens? We made a video not too long ago, the beat the market maker strategy. It's not really beat the market maker, it's follow the big money. And right now the big money washed out a lot of longs underneath last week's low, and now the bids are on. So if I was trading the US 30 today, what I would be looking to do, number one, is just go right to a 30-minute chart, US session 30-minute chart. Why would I target that? Because there's a lot of volume in there. And when there's a lot of volume in there, as they say, it's hammer time. It's time to trade. And right there, you can see the US session really has picked up nicely. What do you have here? Do you want to buy right now or sell? You don't really want to do either. Clearly the buy was right on a 38% line. We've broken above that. If you do get a retracement back down to that 43, 425-ish, somewhere in there, that's going to be a pretty good trade. So if I'm trading the US 30 today and I'm scalping, now this is just a day trade. This isn't taking a position and believing that the market's going to go up forever, because I think that you're going to see a major sell-off here relatively soon after the new year. But right now, if you do get that pullback right in this area, this 43.25-ish, you could probably trade that today and be just fine. So I would be watching that US 30 relatively closely. It's been the big winner since the election victory, since Trump won the election, the Republicans won the election. Large cap stocks in the U.S., specifically the US 30, they've been going great guns. So right now we're looking at a pretty good market that you want to be on the long side of, but I don't think it's going to last. Interest rate expectations are going to smash these things, and it's probably going to happen here relatively soon. So I would be aware. That's a pretty good day trade, though. Now, as far as gold goes, I get this question pretty much all day, every day about the gold market, and let's just address it right off the bat. What do you have here? Nice big pullback, nice big monthly pullback of almost 5%. All right, the reason why is all that election uncertainty sort of left the party. You know who the president's going to be. You know who the Congress is going to be here in the United States. That took a lot. That took a lot of uncertainty out of the market. Now, right now, you're still very much in bullish territory. So I want to stress that there's very much. I could give you 50 reasons to be long gold. I don't really know where it's going. I got a pretty good idea where we're going. I'm just not really sure how we get there. I would really. I wouldn't bet the ranch on going to 3,000. But I think you have a pretty good chance of going up there to 3,000. Now, you'll notice this is the first losing month in how many? A lot of geopolitical uncertainty have been driving gold. A lot of folks believing we're going into a big-time rate cut cycle. That may not be the case. We'll talk about that later this week. But right now, you're still in a bullish trend. The market structure, a lot of folks are smart money traders. The market structure is not gone. It is very bullish. And this is how I've been measuring trends for the last decade. And it's been, listen, find a spike low, find a spike high, swing low right there, swing high. The uptrend is there. As long as you're above 38%, that means the uptrend is there. It means it's valid and it's strong. As long as we stay above 62%, it means that we're still moving up. We start getting beneath 62%, then we can just scalp down here at 78%. I would love those trades. I just don't think we're going to get them. I think that we have a chance here at right around 24.85 is the number I've been putting out about the last 2 weeks. I've got a lot of questions on it. We just barely missed it. We really did just barely miss it last week. Our low this month is 25.36, and now we're rolling into about the 18th day of the month. So we're looking for a test of this 38%. If we can get it, I think we can nail it. I'm not sure that we get it, though. I'm really not. So right now, incredibly bullish gold. I think that this has been an interesting month. It's clear that the geopolitical uncertainty is starting to creep back into the equation, though. There's been a lot of reports coming out of the Middle East. There's also been a lot of reports coming out of the Russia-Ukraine situation, where we're talking about maybe a possible escalation before we roll into 2025, and that's your big gap up today. It's all about war. It really is with gold. It's all about war, and today you're up about 2%. So if I'm trading gold on a day trading type of a motif or on a time frame, I want to make a nice trade today. What am I going to look to do? Well, right there's going to be your spike low. There's your spike high. We're starting to break out on that 4-hour chart. I love trading the 4-hour chart with gold. It's a true 24-hour commodity, and I think that's an absolutely fantastic way to look at this gold market, especially spot gold. A lot of business gets done in London. If you're in London now, you know what I mean. You guys pretty much move most of the world's gold trading goes right through London, and spot gold's a big part of that. So I like gold futures. We trade gold futures here in the United States through the CME, but don't ever ignore the London session or the European session when it comes to gold. A lot of times the business has already been done, and the U.S. session can get a little bit flat and stagnant. So right now, you've got a nice big breakout here. I mean, this was hot yesterday. Nice big run, nice opening 4 hours, bang, bang, a little bit of compression. Now we're moving higher. Is it a trend? I won't call it a trend. But I will say you want to be on the long side of this market. You don't want to be short. And if you are short and you made a lot of money on this big sell-off right here that came across the board last week, if you made a lot of money doing that, put some of it in your pocket, because it looks to me like this gold market's done correcting, and we're going to see a little bit of action on the top side. So if I was doing anything right now in gold, I get this question 5 times a day: long or short, Shane? Long or short? I would say wait. I would much rather be long than short, but I don't want to be long from here. I want to wait for a pullback right down there to 25.95-ish. Not 95, but definitely 94 and a quarter, somewhere in there. I think you can bid right above that level and be just fine with a nice scalp. There's no reason why you won't win that trade. There's no reason why. There's nothing on the news. We're going to talk a little bit about the economic calendar today, which is very vacant. It's very vacant. Very vacant. Alliteration, right? In any case, you see there's just nothing on the board, guys. There's nothing happening today. That's why we're going to have a little bit of a strategy session. We're going to go look at our Piranha strategy. I'm going to walk you through how to trade that. I know a lot of you really like the Piranha. A lot of you don't. That's okay. But I'm going to show you how to trade the Piranha on a 5-minute chart. And then we're also going to look at the 920 EMA. We had a trade come across the board here not too long ago in the NASDAQ, which sort of it didn't treat us very well, but I'm going to show you exactly how we executed it in a really a good look at that 920 strategy. So I'm sort of watching this. I'm watching there's just nothing there, guys. And when there's nothing there, it's important that we understand there's a time to trade and there's a time not to trade. And I will say this. We got a question in the live chat. I'm going to answer it in just a second, but every dollar that you lose, you have to make back and then some to be a profitable trader. Now, a lot of you have been with me for a long time. You tune in every day, and we go through these markets, and I do my best to give you my honest opinion on what's happening here. I will tell you for a fact that if you find yourself trading at the wrong time, you're going to lose a lot of money. Now, today is not a good day to be trading. And I don't want to damper anybody's optimism. I know some of you have made some money today, and that's great. Believe me, this is a slow day, and this is one of those days where a lot of people, well, I'm just going to cut right to the chase. The market makes fools out of most people. It makes fools out of most people. Now, I'm not saying I'm the smartest person in the world, but I will tell you this. I understand when the game's rigged against me, and what you're seeing today is you're seeing fake breakouts and retracements, and then a little bit of a break, and then we're not really doing anything. Unless you're on like the long side of the NASDAQ, we don't really have any moves at all in U.S. equities. So if, in fact, you're interested in trading Mondays, I highly recommend being, number one, observant, stick to your plan, but game plan for the rest of the week. There's a lot of market left this week, guys. And what happens on Mondays is folks are rolling in late. Folks don't really feel like trading. The institutions, maybe they'll throw some block trades in. They'll really move the market. And then you're sort of out to lunch because the price action isn't really pure. We're not really pricing assets sometimes. Sometimes we're just milling around and people are manipulating the market. All that stuff's very real. It's all very real. I'm sure I'll be called out for it on some social media platform saying, this guy doesn't know what he's talking about. He says the markets are manipulated. I promise you that there are big players in the markets and they drive it to certain price points to see what the market will do. That happens. So, I'm in Dillon, Montana. I know that. Everybody here knows that. All right, let's see. I got a good question here. Dragon 131. Good morning, Shane. I've been successfully trading the Piranha since June, growing my account a little over 2% a month. I trade the Tokyo market Sunday through Thursdays, 3 to 4 hours. Recently, the strategy has gone sideways, and I've had a drawdown. What's the best course of action in this situation? All right, when you're in a drawdown, it's the question of all questions, Dragon. What should I do? I'm in a drawdown. What's the best course of action in this situation? What I recommend is take a look at your strategy. Are you following the strategy perfectly? That's the first thing I would say. So if we're talking Piranha, you can find this strategy right here. Dragon's been trading right here on our website. That was Nick Quinn built this strategy out. These are all adapted from Mario Singh's book. It was a bunch of price action trading strategies. We've got the pendulum. We're going to talk pendulum a little bit later this week. The trend rider, a lot of you really like the trend rider with Connor. And the W strategy, I like the W. The Japanese noodle, challenging strategy. You got to get in there and see if you can figure out how to do that one. I don't know much about it. And then Bach the Talk. I don't know that anybody's trading Bach the Talk. Pretty good strategy, though, if you like trading the news events. If you're talking about the Piranha, there's a lot of things that go into executing these trades and being a winner doing it. And the number one thing you have to do is be consistent. So if you're having a drawdown, Dragon, what I would recommend, take a step back and say, where are my losses coming from? Where are my losses coming from? Now, if you're trading this strictly on the Great Britain Pound USD on a 5-minute chart, it's been trending lately. So if it's trending, you're probably, let's just pull the charts up. We'll pull a daily up and I'll show you what I mean. This isn't the type of strategy that works well when you're trending. That's a downtrend right there. That's an intraday uptrend sort of. Okay, so what do we want to do here? This up in here, you talked about building your account. I bet back in October, life was pretty good. Look at these daily ranges. They're very tight. They're very small. There's not those big, massive moves on an intraday basis. You're trading sideways, essentially. That's when a strategy like the Piranha just kicks tail. It really does, because when you get into flat markets, it's fantastic. When you get into a trending market, I can already spot how many losers. Let's say I started right here at 6:30 a.m. this morning. I might have got a win right there. and then we would have bought. We probably got another win right there. Then we sold. We got another win right there. And then right there, you lost. That was one loser. Now, right now, that loser right there, and we're going to go through the Piranha here in just a second if you're not familiar, but if you lost right there, now you're looking at a buy. So you can't really be taking sells now. You're looking for a buy. So number one, if you're having trouble with your strategy and you're seeing a big drawdown, what you've got to do is you've got to step back and you got to say, okay, is the strategy not performing well or am I messing it up? So I would look at my trade entries. I would look at my trade exits. Am I following the strategy the way it needs to be done? Number one. Number two, am I impulsive trading? Am I taking trades that fall outside of the realm of what I'm trying to get accomplished? That's huge as well. If you're doing that, you're undermining your own progress, and it's really tough to get any sort of sense of normalcy, what I would say. So if you have a big drawdown and you're following the strategy perfectly and you're executing these trades the way that it needs to be executed, then stop trading. When you're losing money, things aren't going well. And this idea that they're just going to turn around on a dime and you're going to start making all this money back and feel great, it doesn't work that way. Typically what happens is you have a nice 45-degree angle, nice profit curve, and you're making a lot of money, and everybody feels great. I've been there. A lot of you have been there. You start dreaming. You start believing that, I can do anything. We're going to nail this market. Then you hit a drawdown period. Typically what happens during a drawdown period, number one, we're losing money. And number two, that puts us on tilt. That means that our wagers typically get bigger. Our bets get bigger. Our leverage gets bigger. Stay out of that. Don't do it. When you're losing, things aren't going well. Bring the leverage down. Bring it down. Take your time. Sit out a while. That's what I would recommend. If you're having a tough go of it right now, reduce your leverage when you're losing. Increase your leverage when you're winning. 99% of the people out there don't get that. When you win, bet more. Play with house money. Bet more. That's the truth. If you guys want the truth, that's the truth. Let's see, Dre Day. Hey, man, good to see you. Good to see you, Dre Day. Sorry about that. I got a little bit behind on the live chat. I got about four live chats in front of me, so my apologies for getting behind. But good to see everybody back in the room. All right, guys, let's talk a little bit of trading now. That's enough psychology. Psychology will bore me after a while, but it's the truth. It's the most important part of what we do here. If, in fact, you want to start trading right now, get in there, claim your VIP trading account at Switch. Switch Markets will get you up and running and ready to roll. Let's talk Piranha now. If you want to trade the Piranha strategy, what Dragon was talking about, you're going to go ahead and you're going to go to the Trading Academy, watch the video. Absolutely, Dragon, you're welcome. You're going to go to Strategies. You're going to go to the Trading Academy. You're going to click on that one. You're probably going to get this prompt. Continue on my current path or move me to a new path. Just go ahead and click move me to a new path. That's going to go ahead and take you to that video, and you're going to have an opportunity to check it out. Nice and short. These are compact strategy videos. If you got 5 minutes or 6 minutes, get in there, watch the video, and you'll be top to bottom ready to roll with this strategy if you need a place to start. Now, right here, the learning resources. A lot of people overlook the learning resources. That's going to just be a nice click underneath the strategies module, underneath the video itself, and you're going to have all these PDFs. So you're going to be able to get in there and click on the PDF. You're going to get the overview, the trading guide, trade examples, and strategies by Mario Singh. You can actually get a link to the book. We're not an affiliate, so don't feel like you're buying the book helping us because it doesn't help us. Don't worry about it, but it's interesting if you're interested in strategies like this. Mario Singh sort of has the masterwork in price action strategies. In any case, this is the Piranha, and the Piranha is really simple, guys. We're going to teach you how to do it right now. Set your chart to the Great Britain Pound USD currency pair. You can put it on any market you want. But what I'm saying is choose a market that's in rotation. If the market is, in fact, moving sideways, you're going to do very well with the Piranha. If it's trending, like what Dragon was just saying, I could see where you ran into problems, Dragon. The market started moving. It started trending. That's going to lead to losses, and we're going to go over that in a second. Select the candles for the chart type, yada, yada. Bollinger Band. Bollinger Band indicator to the chart. Now, that's what we're talking about here. We're going to use a 12-period Bollinger Band. 12-period right there. What does that mean? It means that you're going to use a – let's go ahead and update that to the latest version. What you're going to have here is you're going to have a 12 periodicity. So when you go to your Bollinger Band, you add your Bollinger Bands. Boy, say that 3 times. Put on your inputs. What are you going to do? Length is going to be 12. Now, it's a lot shorter than what I use. I use a 24, but this is okay because this is Mario Singh's strategy. 12 moving average type is just going to be a simple moving average. So you're just going to dial that periodicity down to 12, and that's going to be a real fast moving set of Bollinger Bands. So how are you going to trade this thing? Well, What you're going to do here is you're going to wait for the market to basically come to us. We're going to wait for it to come to us. We're going to wait for the market to touch the top Bollinger Band. That's going to be a sell. Or if it goes down to the bottom Bollinger Band, it's going to be a buy. Now, this is absolutely key, and I want everybody to understand this. Predetermine your trading session window when you will trade the Piranha. This right now is the most important part of the Piranha. Let me see. Mark Corp, when the Piranha goes wrong, that 2-to-1 risk reward is a killer. It absolutely is a killer. We're going to go over that in just a second, Mark, but a fantastic observation. I'm going to show you how I trade the Piranha. It's not 2-to-1, but I'm going to show you. In any case, the Bollinger Band indicator on the chart, Bollinger Band, predetermine your trading session. That's imperative. That's absolutely key. You do not want to be trading when the market is hot. So I would say right now is a pretty good time to be trading the Piranha. You're after the New York Open, sort of the London. We're after that London overlap, which gives us a lot of really active price action, meaning there's a lot of volume in the market. The market's moving. Right now would be a pretty good time. You want flat dead markets. Flat dead markets is what you want if you're gonna trade this Piranha strategy. So what you're going to do here is you're going to avoid times when news can event the market, and you're going to set this position size of your trade equal to 3% of your account. Now, I'm going to throw a flag on that. I don't know about 3% here on each and every trade. You can go as high as 5 or 10% if you want, but you're probably not going to be around very long. I recommend 1 to 3%. Mario Singh says 3%, and the idea is that you're going to turn a profit over by the end of the week if you take enough of these trades. It's not a bad little strategy, though. Here's what you're going to do. You're going to set a stop loss at 10 pips and a take profit level of 5 pips. Now, that's exactly what Mark Corp's talking about. He's saying, hey, listen, this thing's a killer. You hit 2 or 3 losses in a row, you're going to see a major drawdown in your account. And that's probably what Dragon's going through right now. It's imperative that you avoid trending markets. Now, listen, markets break out. Now, when you're trading something like the Piranha and the market's flat, like we see something like this, the market's flat, you're going to be okay. But eventually markets break out. And typically what happens with price action is we consolidate and then we break. And when we break, we really see a big move, and that sweeps us out of there. So essentially what we're looking to do here by executing one of these trades is you're going to go right here. What are you going to do? You're going to look to sell the upper Bollinger Band. It's a very sort of a hyper-vigilant thing, though. You got to be very, very vigilant here. I'm just going to leave those, I call them hanging chads, those points. We're going to go ahead and go there. That was a market order, excuse me. We want a limit order. We want a limit sell, take profit, stop loss, and let's go ahead and put that thing in the market right there. And let's go ahead and put that sell in there. So that's what you're looking to do. You're looking to sell the upper Bollinger Band. You're looking to buy the lower Bollinger Band. It really is that simple. But here's where this thing really the most important part of this strategy is right here. If you lose, you have to wait for the price to go to the other side of the Bollinger Band. So right here, if in fact we lose this trade, and I got to dial that in a little better, I'm sorry, but these things move fast. If you're going to do this, that's not right either. It's about 100, and this should be about 50. If you're going to do this, you've got to be very, very diligent. You got to make sure that your entries are as good as they can possibly be. Now, as far as your stop loss and your profit target, Mark Corp, I hear you 100%. I'm not throwing the strategy under the bus. I think it's a great place to start, but I would modify it if I was doing it. I definitely wouldn't stick around and take a 10-point draw on that. No way. To win 5, you can't really do that. I'm not saying it won't work over the long term. You're going to win a lot of trades, but think about it. If you're laying $100 to win $50, what's your winning percentage need to be? You need to be hitting up there in the 75s and 80% on these trades, and you need to be taking a lot of trades. So from a profitability standpoint, does this make sense? I'm not saying it can't be done. If you follow the strategy perfectly, maybe apply it over three or four different markets, you can certainly make money doing this. Is it hard, though? Psychologically, it's hard, because I can see where you'll sit here for 3 or 4 days and you'll make a big stack of money, and like 2 or 3 losses in a row come along, and you'll walk away at the end of the week going, well, I don't have anything. That's hard. That's mentally, psychologically, that's hard. And I really, I've been doing this for a few years, I think 3 years now, talking to traders and doing these live streams and things. And the number one thing that I want to stress is, number one, understand market state. Understand what a trend in a flat market is. And number 2, get your psychology dialed in. Look at this. The market will get in your head. It'll mess with you. It'll mess with you. maybe I just didn't get entered, or maybe I got entered, or maybe I didn't get filled. Maybe I didn't get my price. Maybe price went to one tick of my profit target and then reversed and stopped me out. Maybe price stopped me out and then reversed in my direction. The market will. There's an old saying that says fatigue makes cowards of us all. The market will drag you into deep water, and it'll make you tired. You get tired after a while. That's why I was sort of, him-hawing around, but I was like, Dragon, if you're having a drawdown and you're having trouble, stop. Take a break. I always recommend that the markets, if you're making your entire living out of the markets, that's fantastic. Good for you. I always saw them as a revenue stream. There's a lot of folks that work full-time that, they deliver packages or work for FedEx or UPS or they work in the oil fields or whatever, and they trade, but it's sort of a revenue stream. I really recommend that for folks that are just starting out. Keep it small, keep it manageable. The swings don't need to get too big, because when they get too big, what happens to our heads? Guys, there's millions and millions and millions of dollars flying around today. This isn't a good trading day. There's millions and millions that are changing hands right now. Billions probably. That's a lot of money. And I like money. You guys like money. The problem with money is it'll hypnotize you. And you think that you got to have it right now when you don't. Be patient. Be patient. You can make more money trading in a 30-minute period when you should be trading than you can sitting here in front of these screens 24 hours a day, every single day. Know when to trade, know when not to trade. What Dragon was saying right there, I trade 3 to 4 hours during that Tokyo Open. He knows exactly when he's going to trade. He or she, I'm not sure, but knows exactly when to trade. And that's the name of this game, guys. Know when to trade. That's it. All right, let's talk about trading a little bit. Looks like we're going to get elected right here on this Great Britain Pound USD. I'm going to go ahead and I want to pull another market, though. I want to do something that typically isn't really mentioned in the Mario Singh book. I think it can work very well, though, with this. And this is a futures contract. This is a good old crude oil futures, WTI crude oil. This is a bread and butter. This is what I trade, and this is what I watch. I'm looking definitely. You could take this Piranha strategy this time of day. This is a flat crude oil market. I mean, Shane, we're up 3%. I go, yeah, but not right now. You're not. Look at what we've done. We got the massive run up early in the day, and now what are you doing? You're chopping sideways. So what I mean by sideways is price is moving left to right. It's not trending anymore. It's not moving up and down. It's moving left to right. Well, when it's left to right, then we've got an opportunity here to step up and trade the Piranha. So I'd be looking to sell right up there and buy right there. That's a pretty good time to put those trades on. One other thing we want to look at here is gold futures. December gold futures. December gold futures is always a huge contract. A lot of folks love trading it. This is a great time of day to be trading this. Let's go to a no one uses a 45-minute chart. Let's go to a 30-minute chart. Let's see. All right. Nice big move. But look at what you have. Bang, 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 bang. We're flat. We're flat. What do we want to do right now? That's a great time to trade the Piranha. Shane, what would you do with your stop loss and your profit target? Personally, I would probably go, you could go 8 to 8 to 8, 8 ticks to win 8 ticks, something like that. 10 to 10. I'll give you 10 ticks if you want to take a shot at it. Upper Bollinger Band right here is about 26.16. Lower Bollinger Band down there is about 26.11. You've got a chance there maybe to get a little rotation back in there. 10 ticks is just fine. You could take 10 ticks off of that. $10 a tick, that's a $100 trade per contract. I recommend, trade 3 or 4 contracts. Get in there and make a few $100 on the play. Good stuff, though. That's a good time to be trading gold on the Piranha. All right, everybody, let's see, 920. We also said we were going to trade the 920 EMA. Now, if you haven't seen the videos that we have out on our YouTube channel, be sure to check those out. We've done a lot of EMA work lately. We've done a lot of EMA work, and we've got more videos there. A lot of folks really love the EMA strategies. I'm not a huge EMA trader. I love my 13-period EMA. That sort of is my basis. It's on my charts every single day. It's something that I look towards for guidance. I know with my 13-period EMA what the market's doing almost immediately. Now, this is a different strategy. This is a 920 EMA. We use an exponential moving average because it's more sensitive to price action. It puts more weight on the most recent price action. So right here, what do we have here? This is NASDAQ futures. I know a lot of you don't trade this stuff, but I'm just going to show you because it's a fantastic example. What do you have? Now, right there, you've got the 9 crossing the 20. That would have been your signal to sell. But take a look at our confirmation down there. Relative strength index. We were in overbought territory when price was right up here. Seems pretty obvious, but we were overbought. We were above that 70 on that RSI. What happened? You got a big 10 minutes, a big crash, then we started coming down in here, and then what goes? Bang, there's our crossover. So if you're going to use confirmation devices to trade crossover strategies, you've got a 9 EMA, you've got a 20 EMA. When the 9 crosses the 20, essentially we're going to trade, but we have to have that last piece of the puzzle, and that's your RSI. Now, we haven't made a video on RSI confirmation, and I'm probably going to put one out here in the next several weeks that is going to show you exactly how to trade this. But what this is when you're above 70 on the RSI, it means the market's overbought. We want to sell. We want to look to sell and capitalize on falling price action. If we're beneath 30, we want to buy. Well, why? Because we're oversold. Very simple. It's not hard. Overbought, oversold. We want to sell overbought. We want to buy oversold. The problem is with RSI is you can't just do that. You'll get into a trending market and you'll get absolutely shredded. Like right here, it was telling you to sell. The RSI was telling you to sell right here. What happened if you sold? You got a bit of a retracement and then you got really killed to the top side. Can't do that. That's where our crossover comes in. I like the 920 crossover with RSI confirmation. I think it's a pretty solid strategy. A lot of people hate it, but I think it's pretty good. I think we're going to be just fine with this. So in any case, you get that crossover, you're looking to sell. So the big question that I would be given almost, religiously is, okay, you're going to sell it. Let's go ahead and just sell it. We'll sell it right here. Basically the same thing. You would have sold right on that crossover. You would have sold right here. So we're pretty close to where we would have been in the market anyways. Where would my stop loss be? Well, your sell is going to be right here. Now, I recommend market structure. Now, a lot of folks, you can just put on a 1-to-1, 1-to-2, 1-to-3, whatever the hell you want to do, and put your stop loss up there. What I call that an arbitrary stop loss. And what I mean by that is that your stop loss doesn't mean anything. So right here, you could have sold right in this area. You could have played a real tight stop. Shucks. Got the wrong color up. You could have played a real tight stop right above this market structure right here. You could have done something like that maybe. Okay. If you did that, you were just fine. If you played really tight, you got stopped out before the market looks like it's going to go in our favor. Now, I always say if you're going to trade moving average crossovers or stuff like this, understand it's a trend play. Understand that you're looking to get in on a big move in price. Tough to scalp a 920 strategy. It really is. It's tough to scalp it. It can be done, but it's tough. So right here, you see we just sort of took a market short. Is that a valid short? Yeah, we could take that short. There's no problem with that. There's your crossover. There was our confirmation on the RSI. Overbought territory. We want to sell. Okay. Bam. There's our crossover. We're selling right in there. Our entry point's not that great, but still, you see what I mean. Where do you want your stop loss now? If you put it right here, you got stopped out already. I think you need to use market structure. There's the top of this thing. There's your crossover. We believe the momentum's going to come down. Is the NASDAQ going to sell off the rest of the day? I don't know. Our indicators tell us that we may, in fact, have called the top of the market today. Something to think about there if you're interested in this 920. I'm going to go over this a little bit more in detail later this week. The reason why I choose the NASDAQ for these examples is because they're a great tutorial. It's a very active market and gives us an opportunity maybe to make some trades. All right, let's go ahead and let's pick, let's see, dollar yen. A lot of people trade the dollar yen. Okay, that looks pretty sweet right there. You could have got short, but what? You don't have the confirmation. So right up in here, we were in overbought territory on this dollar yen. Right there, see that? Back during the overnight, about 6 a.m. 6 a.m. my time, about 8 a.m. Eastern. Overbought territory, bang. So what would that trade have looked like? That would have been your crossover. That right there probably would have been your sell. Where would your stop loss need to be? You could put it there if you wanted, or you could put it there. If you're going to do that, 155.35 and then 155.04, you need to get 31 pips at least a 1-to-1 on these. So where are you trading right now? 154.62. Winner, chicken dinner. Ring the bell. So you'll notice that this market structure is very, very difficult though. Bam, nice big sell-off and then a pullback. And if you trade these too tight, if your stop loss is too tight, you're going to see this happen to you more times than you can count. You're going to get stopped out, and then the market's going to go in your direction. So definitely be careful with these strategies. Understand what time frame you need to use. I like a 4-hour. I'm not going to lie to you. I think it's a great swing trading, really a great swing trading opportunity here in this dollar yen. 4-hour chart, love the 4-hour for Forex. Why? Because it's traded all around the world, heavy volumes throughout your trading day. 4-hour chart gives us a good idea of what's happening every day without us getting chopped up. I think it's a pretty good time frame to be trading Forex. I would use my dailies in 4 hours as opposed to a 5-minute, but you can. We're scalping here today. In any case, right there, what do you got? You got overbought territory, and that came across the board last Thursday. Then you got a nice big break and then a crossover right there on Sunday's open. There was your cross. There was your sell. Why would it be a sell? Overbought territory. There's your crossover. The 9 crosses the 20, and you're short, 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 short. Where should your stop loss be? A couple of options. You can stop yourself out. You can stop yourself out right here if you want. Above that spike high, I don't have a problem with that. I wouldn't eat anybody's lunch for that. If you wanted to make maybe a swing trade, that probably needs to be your stop up there. Or if you're just hyper aggressive, I guess you could put it down in here. But look what happened. You got stopped out before the market's probably going to go in our favor a little bit. So something to think about there. All right, guys, I'm going to go ahead and sign off here. This is a great strategy session today. I really enjoy these things. Sometimes it's good just to sort of take a big step back and talk a little strategy. And right here, there's your there was your Piranha trade. Should be short from up there. I didn't adjust the entry point. Should be right there. But I think we got a decent chance to make that trade. Stop loss is right up there, up over 26.80 it looks like, up over 26.75. So interesting scalp. We'll just wait and see what happens. All right, everybody, I'm going to go ahead and sign off here for a few hours. I'll be back tomorrow, as will the powerful Connor Woods. So we're going to go ahead and come back in. Just remember about Mondays, every dollar you lose, you have to make back. And a lot of people, I'll just cut right through the nonsense here. When you're talking about a 9 to 5, and I talked about it last Monday, a lot of you know folks know folks that work a normal job. This is not a normal job. And just because you're not trading doesn't mean you're not working. Now get in there today, take a look at price action, game plan for the rest of the week, line up your economic calendar, have a good idea of how we're going to attack tomorrow, the next day, the next day. But if you, I got to say this nicely because I've worked a lot of jobs. I was in construction. I worked in the oil fields. I've done a lot. And I can tell you that a lot of the folks that I was working with, they said, well, I'm going to work. And they would go to work and they wouldn't really do anything. They would just fill out a time card and they would get paid, and all that's great. But when we're talking markets, if you're not trading, it doesn't mean you're not working. And the difference between working a regular 9 to 5 job and being a trader is regular 9 to 5 job, you can't really lose money. You go to work, you're making money for your time. You're not losing it. In our business, you can lose when you go to work. I always say that, the best fighters are the ones that tuck their chin, keep their chin tucked. Don't hang your chin out there, because the markets will, honestly, they have more money than you and they can destroy you fast. Us retail traders, they can destroy us fast. They can destroy me fast. I don't hang my chin out there anymore. I don't give the market a chance to do that. I know exactly what I want to trade. I want to know what I want to trade, and I know what I'm looking for. And if you guys can get to that level to where you know when to trade, what to trade, and what to look for, you're trading from a position of strength. The market comes to you. You don't go to the market. Price comes to you. You don't go to price. It's a good day for that stuff. It's a good day for that kind of reflection. A lot of people are getting chopped up and losing money today. I don't want to see that on anybody in this room. Let's make money. Let's play on the green side of the ledger. Let's stack it. Stack them, don't rack them. Let's stack it. Let's start stacking some chips. Let's get serious about making money. It's important. You make money, everything else changes. All right, everybody. I'm going to go ahead and sign off. I want to congratulate Jake Paul for beating Mike Tyson last Sunday. I don't know if last Friday, if anybody else watched that fight. That could have been the biggest robbery of all time. An amazing marketing job. But it was good to see Tyson back in the ring. But I'll tell you what, 58 years old, the moral of the story is just don't get old. Great fight, though. It was a terrible fight, but it was a great show. So if you guys watched any of that stuff, fantastic. All right, everybody, I'm just rambling at this point. I'm going to come back tomorrow. We're going to get into some deep stuff. Look at the trade ideas from last week. We got a lot of levels that are in play. Dow 30 is going to come into play. The gold gold's going to come our way, and we're going to be in a fantastic position to make a little bit of money. We'll have a trade idea out for you probably in the next hour and a half, maybe 2 hours. So go ahead and check your email box if you've followed me. I'm here in the trading room. If not, it'll be posted in that live chat. So be sure to check that out. And if you like the analytics, be sure to check out our analysis stream, or our analysis thread. Plenty of trade ideas there. Good opportunity for you guys maybe to get in on an actionable trade idea and have an opportunity to trade. That's it. All right, everybody. Have a fantastic trading day. Be conservative. Learn a little bit about the markets. We're going to go, man, guns blazing tomorrow and make a little bit of money. All right, everybody. Have a fantastic session. We'll see you soon.